Tax-free income secret code. From PPF to gratuity. How your earnings can become zero tax. Imagine this. It's the last day of the month. Your salary gets credited to your account, and along with happiness, a fear creeps in. How much tax will be deducted from this? A whole year of hard work, late nights, targets, and stress. And the moment your income reaches you, the government share is deducted first. Most people have accepted this as a fact of life, that higher income means higher tax, and there's no escape. But this is where the biggest misconception lies. The truth is, income tax laws are not designed only to collect tax. They are also meant to provide relief to those who plan smartly. And if you understand this system, a large part of your income can legally stay with you. One of the most interesting aspects of India's income tax system is that there are certain incomes and investments on which the government does not take even a single rupee as tax. The problem is that most people either don't know about them or they fail to use them properly due to half knowledge. The result? People accept tax as unavoidable, while smart individuals stay within the same system and still pay little to no tax. Let's start with a very common yet poorly understood concept. Profit received from a partnership firm. If you are a partner in a partnership firm or an LLP, the share of profit you receive is completely tax-free in your personal income. The reason is simple. The firm has already paid tax on its total profit. The government does not tax the same income twice. This is where confusion arises. If the firm pays you salary, interest, or remuneration, that amount will be taxable in your hands. But the pure share of profit is legally tax-free. Business families and professionals have been using this rule for years. The only difference is that the common person is rarely given clarity about it. Now let's talk about life insurance, which most people view only from a protection perspective. But insurance can also be a powerful tax planning tool. A life insurance policy, taken with the right conditions, offers a maturity amount that is completely tax-free. This means the premium you paid, the bonuses earned during the policy term, and the lump sum received at maturity, all are tax-free. However, there is a catch. At the time of buying the policy, the ratio between the premium and the sum assured must be correct. If planned properly, insurance can become not just a risk cover, but a zero-tax wealth creation tool as well. Now let's come to the money every salaried person waits for. Gratuity. The gratuity you receive after working in a company for years is not just an emotional reward. It also offers major relief in tax planning. For government employees, gratuity is completely tax-free. For private sector employees too, gratuity is exempt from tax up to a prescribed limit. This money is a reward for your long service, and the government treats it as a mark of respect. Many people receive gratuity worth lakhs at the time of retirement without paying any tax, simply because they understood the rules in advance. Now let's talk about the most trusted friend of the middle class. PPF, or Public Provident Fund. If there is a gold standard in the world of tax-free investments, it is PPF. The amount you invest, the interest you earn on it, and the entire maturity amount. Everything is completely tax-free. This falls under the EEE category. Exempt, exempt, exempt. Under the old tax regime, you also get a deduction on the annual investment. For long-term investors, PPF is an option with zero risk and zero tax. That's why people have been using it for decades for both wealth preservation and wealth creation. Now let's talk about the most emotional investment for parents, their daughter. The 𝐮𝐩𝐼 is not just a government scheme. It is an answer to parents' future fears. Their daughter's education, marriage, and security, all addressed through a structured savings plan. The investment made in the scheme, the interest earned, and the entire maturity amount are all tax-free. The interest rate is also more attractive than most other schemes. That's why this scheme has become a strong pillar of long-term, tax-free planning. Now let's talk about an income that students often don't even know about. Scholarships. Scholarships received for education are completely tax-free. Whether the scholarship is given by the government, a private institution, or a foreign university. If it is for educational purposes, no income tax is levied on it. Many students and parents worry that the scholarship amount might become taxable, whereas the reality is that to promote education, the government has kept it entirely tax-free. The same rule also applies to certain government awards and academic prizes. Now let's come to India's most powerful tax-free income, agricultural income. In India, income earned from agriculture is completely tax-free. Earnings from selling crops grown on farmland, rent received from agricultural land, and profits from selling rural agricultural land, all are tax-free. This benefit applies only to agricultural land in India because agriculture has always been the backbone of India's economy and society. However, if farming activities carried out outside India, then the income earned from it is considered taxable in India. But money earned from agriculture within the country is still fully tax-free. Now take a step back and look at the bigger picture. All these options are not loopholes. They are legal provisions given by the government. Saving tax is not illegal. Tax evasion is illegal. The difference lies only in awareness and intent. Those who understand the system stay within it and still don't pay tax. Those who don't understand it keep thinking every year, my salary has increased, so my tax has increased too. In reality, tax planning is not a trick used by the rich. It is a habit of disciplined people. The right investment at the right time, income structured in the right way, and a basic understanding of the laws. That's all it takes. You don't need to take any wrong path, nor do you need to invest in risky schemes. You just need to know which incomes are legally tax-free and how to include them in your financial planning. In today's time, the biggest risk is not that you are paying tax. The biggest risk is that you are paying tax without thinking. Because every rupee that goes unnecessarily in tax is taken away from your retirement, your children's education, or your financial freedom. So the question is not, how do I save tax? The real question is, how do I protect my money by understanding tax laws? And the day you change this mindset, your entire financial journey will change. Remember, earning money takes hard work, but saving that money takes wisdom. And wisdom never makes noise. It works quietly.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources: news from various news agencies, opinion polls, and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.